Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help people just like you become independent and profitable traders within the foreign exchange market. So, if that's something that you're looking for, you are definitely in the right place. I do just want to thank all of my returning subscribers for being so supportive, for leaving comments on the videos, asking questions, because I absolutely love helping you guys learn. If you are new to my channel, welcome. I really am trying to make this as simple as possible for you. So I do have a lot of videos and a few different playlists that you can check out. But if you do need more assistance than what I have on YouTube, I did create the Money Mantra app, which simplifies day trading even further by giving you a structured learning environment and putting you in a community with other traders. So if that's something you're interested in, the information is down below in my description box. So in today's quick video, we're going to be doing a trade breakdown. This is something that I do for almost every trade that I do. I try to do as many as possible for when time allows to just give you guys some insight into how the trades we took in the group chat actually played out. So in today's video, we're going to be talking about this Euro USD trade that I posted on January 28th, 2024. And it was actually the trade that we review in the live session because a part of my mentorship program, we do have live sessions every Sunday at 6 p.m. EST, and they're hosted on Zoom. So I recommended that this trade go for a sell at market execution or to set a sell limit, which is a type of pending order within the supply zone. I did give a recommended entry point, a stop loss recommendation, and also 3 different TPs like I typically do with a maximum profit of about 80 pips. Now, these are just loose guidelines. My students do have the opportunity to have a lower stop loss, have a higher stop loss, and really modify the trade to fit their trading style and what's going to work for them. So we are going to head over to TradingView, and I'm going to be breaking down what I looked for when I got into this trade, and then we're going to see how it actually played out. So first and foremost, TradingView is the website that I'm using today, and TradingView is a really great platform for charting and a social network for traders. So I highly recommend that you guys check it out, get yourself a demo account, and really start practicing if you're serious about furthering your trading journey and trading education. So the first thing I noticed was I like to look at my charts starting on the weekly time frame. And that's because if I'm looking at something over the course of weeks, the data and the confirmations that I get are going to be much stronger than if I was looking at it on a smaller time frame. Now, I'm not saying that you can't look at it on a smaller time frame, but when I'm trading, a part of my trading style, a part of my edge is to start on the weekly time frame. And you'll notice that once we've actually zoomed out and we're on the weekly time frame, each of these candles represent a week. And the first thing I noticed was that this market seemed to be on a very strong downtrend, right? It seemed to be selling. I saw that it had a retracement. It sold, a retracement, it sold, a retracement. So I assumed that the next thing that would happen would be that it would continue to sell. And not only that, I use this rectangle here, which is one of the tools you can find on TradingView to create my supply zone. Now, supply is an area in the market where it tends to sell. And I know that this is a supply zone because I can see that in the past, the market tapped into this area and then it sold. And then on the flip side, I created my demand zone. A demand zone is a area in the market where it typically buys. So I saw I had a demand zone here. We did have a little bit of a breakout here. However, the key here is this supply zone. It came back up twice. It sold. It came back up a third time. It sold. It came back up a fourth time. It sold. It came back up a fifth time. So my intentions in this trade was to catch the momentum of the sell coming back down. So I highlighted my supply and demand zones on the weekly, and then I went down to a smaller time frame to actually choose my entry point because you notice once I went down to the hour time frame, I can't even really see my weekly box. my weekly supply zone. And the price is so high that I don't want to have to wait that long for the price to retrace in order for me to take a valid trade. So what I did was I came down to a smaller time frame to see if I could find an even closer entry point for a potential sell. And I'll just highlight this here. We can see that the market came to this area. It sold. It came back up almost to the same area, and it sold again. Now, the next time it came up a little lower, and then it sold. And then it came up a little lower, and it sold. So looking at this slant here, I can see that this is a pretty obvious downtrend. So I decided to set this trade for market execution, which means I just wanted to hop right in. I didn't really want to wait too much longer because I had my confirmation on the weekly. I had my lower supply zones forming. I had the confirmation of a downtrend. But I also took a look at my stochastic oscillator, which is this indicator here. And the stochastic is made up of two lines. Now, there are so many different ways that you can use the stochastic, but I'm just going to show you what I was looking for and what I found, and which helped me decide to get in for a sell. Now, the stochastic oscillator is pretty straightforward. You'll notice that when the market tends to be going up, like it was in this example, the stochastic will also be reflecting the same type of movement. Versus when the market tends to be going down, the stochastic also mirrors that movement as well. Now, I'm just going to go back to the past for a second to show you guys just more examples of using the stochastic simply going up or down. We have another case here where the market was buying for this period of time. Simultaneously, the stochastic was going up. And right next to it, we can see the market had a reversal. It sold, and the stochastic was also going down. So the direction of the stochastic and the direction of the market should always mirror each other. Now, as we can see from this example, the stochastic was facing down, which confirmed to me that the market was going to continue to sell. And I assume that it will sell back to a previous low like it tends to do. And that's how we are able to recognize these really strong supply and demand areas. So I'm going to go ahead and hit play, and I'm going to see what actually happened in this trade. And again, if you have not subscribed to the channel yet, but you find this video extremely easy to understand, insightful, make sure that you hit the subscribe button now and hit the notification bell so that you never miss when I drop a new video. So here we go. Now, I did expect this trade to go a little bit higher up to this gray line, which was my sell limit entry, but I also did take this trade for market execution. And we can see right off the bat that first target was hit for about 10 pips, which isn't too crazy, depending on your lot size. And then the market hit my second TP, which was 35 pips from entry, and it's still continuing to go down. The third TP was also hit for 55 pips, which is amazing. If you were using a dollar lot size and you entered this trade only 2 times, you would have made about $110. Or even if you were using something as small as 10 cents and you entered this trade twice, you would have made about $10.10, which still isn't bad at all, just from understanding some shapes, lines, and colors. So that's really all I have for you guys today. I really hope that this was helpful and that you learned something. If it was helpful, make sure that you do subscribe, right? Don't just be a lurker, be a supporter and continue to help the channel grow. If you have additional questions about this video, feel free to drop them down below in the chat and I'll answer them as soon as I can. And again, if you do need more help or you want to work with me one-on-one as your personal mentor to help you become an independent and profitable trader, you can register down below at themoneymantra.talentlms.com. But that's all I have for you guys today. Until next time, rich friends.